You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is time for TWIFO, This Week in Futures Options. You know what's going on in the world of futures options? Well, let's find out together, shall we? My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network that all of you folks are just mainlining out there these days. Make sure, if you haven't checked out the Pro yet, what are you doing? You're missing out on a fun time. If you want to check it out for yourselves, only one place to go, theoptionsinsider.com/pro. Congrats to Madam Gigi. She is the winner of our May Pro Trading Crate. If you didn't win, don't get mad at me. It was Passarelli who picked it, so get mad at him, Dan over there at MTM. If you want to win the June Pro Trading Crate, again, theoptionsinsider.com/pro, the only place to get your name in the hat. Also, awesome Pro Q&As. We went deep into a lot of the metals and the rates and some energy on the Pro Q&A this week. So if you want to check all that fun stuff out, again, check out the Pro. It's a good place to go as we see who's joining us on the old CME Group hot seat today. I'm pleased to welcome back. It's been a little while since we chatted with him on TWIFO. He's been on the European Market Brief. He's been on, of course, Vol Views pretty much each week. Now, moonlighting in the world of futures options. Our good pal, Mr. Russell Rhoads, a.k.a. the once and future Dr. Vix. Mr. Rhoads, welcome back to the show, sir.
As always, very happy to be here. You guys are going to get sick of me pretty soon. I do have to editorialize a little bit on Passarelli. Of all the people that you have on this program, he would probably be the most difficult one to be mad at. He's like the nicest freaking guy in the world.
He is a very laid-back guy.
He is so laid back. Yeah, he went down to Indiana with me for a day recently, and he is a great road trip partner. Cool as a cucumber.
Because all the day drinking that he's doing, it makes him fun in the car, I'm guessing, right?
That's yeah, and me, I got my gummies, and we just balance each other out.
A good tandem to have on the road behind the wheel. There you go, listeners. If you don't know what I'm talking about, check out the old OBC, even though I know most of you do already. As we keep on rolling, listeners, it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. And if you're hoping for a pretty darn green chart this week, you're a happy camper. I can't remember the last time it was this biased in one direction. We could put together a bottom 5 and maybe if we scrape a bottom 10. But that's really about it, listeners. Not much red to be found on the screen today. It is all green all the time. Remember, if you want to see this chart for yourselves, make sure you're following us over there on the old Twitters. We do tweet it out before the show. But that said, Mr. Rhoads, it's been a while since you joined us on the show. I'm not sure if you remember how all this fun works. You think you can handle a little bit of light side and dark side breakdown for the folks, sir, or is that too much to ask?
Too much to ask. I'm not the least bit surprised at the top one, but let's start at the bottom. Actually, aren't I supposed to ask you if we should start on the dark side or the light side?
You get to choose.
Isn't that how it's supposed to work?
When I toss to you, sir, you get to choose. You want to do the dark side, the bottom 5, or the light side, the top 5 first. Either way, the floor is yours.
Do the bottom 5 first, because honestly, with one exception, I'm not very excited about any of those markets. So fifth from worst, we got the Nikkei in yen, and it was down to a little bit. There's not a whole lot of red on here.
No,
I mean, the worst performer.
Not a lot of red.
Yeah, I mean, the worst performer is down less than 1%. Then we got, and we've got one of my favorites. I know the volume's not there, but I really do love being able to trade sectors versus each other, and I've been doing it with the ETFs forever. I gotta twist my own arm and get me involved in the using the industry-focused futures and consumer discretionary. They're down 1.8%, 08% on a week-over-week basis. Not exactly shocking. If if you're worried about the economy in the world, if you got any uncertainty about the economy in the world, discretionary stocks are something that you most definitely want to avoid. You know that I pay attention to markets all over the world, although we're only talking about the U.S. markets today. But in most parts of the world, consumer discretionary is having a very difficult 2025. So it wasn't just last week for these futures. Then we get into old school traditional futures. Corn down 1.79%. I'm gonna ask you a question that I bring up when I'm teaching derivatives at Indiana. Do you know how they came up with the size of a corn contract?
It fits in a rail car, I believe, right? Or is it a barge?
Exactly.
Yeah.
It's how much can fit into a single rail car for both corn and our worst performer this week.
I've been doing this futures rundown for a little bit. I picked up a thing or two, sir.
You picked up a thing or two. So, but every once in a while you hear one of those old 90-year-old traders refer to contracts as cars, and that's where it actually came from. So
there you go. Bet I surprised you with that one, didn't I?
Yeah, I had a feeling you might get it, but typically nobody in my derivatives classes gets it. Which makes me,
kid rolling into a derivatives class is going to know that, I don't think.
Well, and in graduate school as well. But, like many professors, I just bring up things like that so they know I'm smarter than they am. The second to last is not something that can fit in a rail car. It's Bitcoin, down 1.85%. And then soybean oil, down 3.35% on a week-over-week basis. Really, I don't even think there are 10 markets on this list that were down. So we couldn't even do a bottom 10.
No, we couldn't. Maybe a bottom 8. I mean, look, number 5 is down less than 1%. The Nikkei is not much red at all.
I know. It's the financials, the utilities, RBOB, and that's that. Well, actually, that's about it. Yeah. So, all right, let's go to the good markets and the fun markets. And the number 5, 1, 2, 3, 4, 5, the fifth best performer, and all but one of these really have something in common. Palladium up 4.49% on the week. Bear with me a second here. I just had a little glitch in my computer. Copper which is always an indication of how excited are we about the economy. Seeing copper higher and consumer discretionary lower makes me question the world, but there's a lot of goofiness in the world right now. Copper's up 5.59%. Platinum was up 4.49%. I think I might have said palladium because palladium is third. And I apologize to all those people that trade platinum and palladium and palladium.
Not
and
as easy reading a list as it might seem, sir.
I know. Now, a lot of people don't realize how hard this is. But no, I respect you. So 5.65% on palladium. Our outlier, it's the old Widowmaker. Natural gas was up 6.02%. Which means it could be down 6.02% next week. I traded that for a short period of time, and a lot of people warned me not to, and I figured out quickly it's probably something I shouldn't be dealing with. Didn't cost me any money, but I just realized that the volatility was more than I thought it was going to be. And then finally, the very best performer last week, silver, up 6.96%. I know a lot of people have been looking at the silver versus gold trade, and gold was only up 1% last week. So just to throw that comparison out there, gold was way down at the high. It wouldn't even be in the top 10 because there's so many things were bullish last week.
A hot week, as you could see, listeners. You want to see that chart for yourselves, check it out. And as Mr. Rhoads broke down, our light side is, except for the Widowmaker, except for nat gas, is dominated entirely by the metals: platinum, copper, silver, and palladium, 4 of our top 5. So I think we have to start there first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Our chat is happy that I got that trivia question, Mr. Rhoads. They're saying I'm the future's man. I don't know if I'm the future's man, but I've always been a bit of a dabbler. The future's rundown. Of course, this show over the years have forced me to dive deeper into those worlds. So yeah, I have a nugget or two I can plug, enough to be dangerous, sir, on occasion out there. But let's keep rolling here. Let's go out to the metals. You know where to find these reports for yourselves. CMEgroup.com/TWIFO is the place to go to learn more, listeners. Then we're going to go into the metals, which are pretty much at the bottom of that asset class list. Then we're going to kick things off in precious. And then, Mr. Rhoads, I'll let you choose where you want to go on the precious first. Do we start with the big mover, silver, with lighter volume? Do we start with the big dog in the room, which is gold? Something else? Where should we start this week, sir?
Silver, and then I kind of want to transition to gold because there is a contrast of some things I'm seeing in the option market there.
All right, then. To silver.
And at the same time, it kind of confirms some things that we're seeing on charts. It's just interesting to get information from different places like that.
All right.
And now I'll stop talking over you.
Uncle Mike will be excited. He's our resident silver bull. He was very excited on the last show talking about the pop in silver, talking about how we haven't seen these levels since, I believe he said it was 2013. I'll have to go check the charts to confirm. But yeah, hot times out there in silver. If you go into that drop down, listeners, obviously silver is going to be 2 from the top there in the precious list. Silver hanging out 35.76 in that front future, up 273 or 8.25% just since Monday. Of course, if you go back to the end of our show last week, up about 7%. Still just a hot week for silver. So all of you silver bulls who've been writing in and asking on our pro Q&As and even on this show and on Futures Rundown to all of our guests, like, what the hell is up with silver? Why is it not playing along with gold? Here you go. Maybe a little bit later than you expected, but getting a nice little pop out there. Also seeing a nice pop in the volume. Almost 90,000 contracts on the tape in silver. That may not sound a lot compared to the gold or 3-month SOFR or the E-mini or the 10-year note. But for silver, that's a fair amount of paper. We've come in some weeks 25, 30,000 contracts maybe. So nearly 90, pretty much 3x that. That's a pretty hot week out here in silver, listeners. And of that, almost exactly half, 46.6% going up in the July contract that has about 20 days to go. So we're going to hang out there. But before I get into all that fun, Mr. Rhoads, what's catching your eye in the werewolf bane known as silver, sir?
Skew. Even though it's broken out, or maybe because it has broken out, this is the one metal market where the out of the money calls have higher implied volatility than the out of the money puts. The rest of the markets, it's more of a smile. The July contract is kind of balanced, but as you start to go farther out, it's definitely more bullishness on the silver skew. I mentioned to you in the note, I did something this morning, and where I was talking about the futures markets, and we specifically talked about this topic, which is why I wanted to talk about it today. And earlier today, the silver skew looked a lot more bullish than it does now, but it still looks more bullish than gold or platinum was the other one that we spent some time on. Gold looks like it's stalled out on the chart. It looks like it's stalled out implied volatility wise, and silver looks like it's breaking out on the chart and looks like there might be some more room to run there. So the relative move, at least according to the option market, might not be over yet.
Let's talk about some of that action out there, shall we, listeners? If we get on out to the old TWIFO land, and here I am messing around with different things to find you prices, listeners, and Nick and his team changed all the UI on me. There we go. All right, let's get back to silver, listener. Like we said, a lot of that action going up in the July contract, nearly 15% out there in silver land. So, excuse me, nearly 50% out there in silver land. And what is dominating the tape out here? Russell was alluding to, we did see a heftier skew recently, and that was the case last week as well. The calls were nearly 8% bid last week in the July contract. This week, it's been cut pretty much in half, 4.1% bid. So still a little juicy, but not quite as juicy as we're used to seeing in most of the precious metals, and certainly in silver. Again, reflective of the fact that we have seen the move. Maybe we've seen at least a good portion of it. So when that happens, typically you see some of that upside call wing. Once the move kind of hits its apex and kind of peters out a little bit, you're going to see that call wing come crashing back to earth a little bit. And that's pretty much what we're seeing. The puts last week, 6.5% discounted. Nobody wanted them. This week, getting a little bit juicier, still discounted, but gaining about 4 points. They're about 2.6% discounted now. So interesting stuff out there. Still, as Russell pointed out, a traditional precious metals skew shape, but not quite as aggressive as it was even a week ago, which again, not surprising because we have seen the move. And the big dog out there, like I said, the July 37s, nearly 4,000 of these bad boys on the tape out here this week. Trading pretty actively today and Tuesday. 1,100 on Tuesday, mostly opening. 1,500 today against an OI of only 1,800. So it's a good chance they're opening again today unless they're bailing on these bad boys. By the way, if you're wondering what prices these are trading for, these were going up for about an average price, at least today, of about 57 cents out there today. So is that worth it to you, listeners? 57 cents, 37 calls. I mean, we've already had a nice move. That'd be another pretty good move on top of what we've already seen. Again, 8.25% just this week. That's a pretty hefty move. And maybe you think more upside is to come. The thing that makes you happy maybe is that those calls are not quite as juicy as they were a week ago. So maybe that makes you happy. But still, 57 cents for a call, 20 days to go. Still about $1.25 out of the money. I don't know, Mr. Rhoads, are you down for a little July 37s in silver, sir? Or you think we've already kind of seen the move?
We've seen the move. We've seen a move. We've got a move up to around 36, which has been a hell of a spot for silver to get through. In fact, we poked our head up, we whack-a-mole. I like to refer to it as a whack-a-mole. With the little stick on the candlestick, or the little skinny part of the candlestick is sticking above 36 right now. Might be why the call skew has come down a bit relative to put skew in the past 5 hours since the last time I was looking at it. But if we solidly break through that 36, we could see 40s. We could easily see 40s.
40s. Ooh.
So. Yeah, I mean, there's just not a lot of resistance up there, and silver has underperformed for enough of a time relative to some of the metals that maybe it is time for it to play catch up. I think one of the reasons it's lagged is there is some institutional demand around silver, and I think I think some people have been loading up on gold for geopolitical reasons. So that difference may be going away as well. So I could see some fundamental reasons. Technically, I can see it almost breaking out. And I would, I might be more inclined to buy the 36 calls, but I split in hairs on that one. Because I do think if you solidly get through the 36 level, that there's just not a whole lot of resistance up there, and you're going to have a little bit of short covering.
Sounds like you want to buy those 37s in July, sir. If you think we can see a 40, interesting stuff.
I'm thinking about it.
Is Uncle Mike paying you to talk up silver? Is that what's going on here?
No, not at all.
Hey, our chat pointing out right now, we're talking about metals, listeners. Platinum is trending pretty much number 2 on Twitter worldwide, below the paid post for ballerina movie. It's right. It's platinum. Everyone's talking platinum. So apparently the metals are in everyone's crosshairs, Mr. Rhoads, right now, which means we need to talk about the big dog, the elephant in the room, which is gold, listeners. Pop out of that silver. You're going to stay in the metals product family. You're going to go up one slot in the products to gold. 33.73 in gold right now, up 58 handles, or nearly 2%, about 1.75% since Monday. Obviously not enough of a move to break into our top 5 this week. But again, look at our list. It was a wild list. You needed to really be moving. Gold is net up only 1% on the week. That ain't going to do it for an aggressive week like this to break into the top 5, listeners. But gold's been a fascinating one to watch. Obviously getting north of 3,500, threatening that 35.5 level, which is pretty much an all-time high. Then falling out of bed, breaking back below 3,200, and now back 33, pretty much 33.75. Mr. Rhoads, let's start there. What are your thoughts on the just wild saga that has been gold this year, sir?
To be the market that we would look at when there was geopolitical tension, et cetera. And I really do believe that, and I know that a couple of the countries that not necessarily our friends have been loading up on gold, which is something you do before geopolitical trouble. So I think the move in gold could be more. The move that we've had in gold could be a bit more emotional than logical. And we really are seeing a balance between the out of the money skew for both, or out of the money implied vol for both the puts and the calls on gold, which in addition to looking like it stalled out a bit on the chart, as I noted a few minutes ago, it looks like option traders are either not concerned because there are people that get hurt by higher gold prices, not necessarily concerned about gold going much higher, or, not excited about gold going much higher from where we are right now.
It does seem like all the energy this week is heading into silver, and I guess from the trend, platinum. People are loving the other metals this week because gold not really looking that hot. Of course, the move only 1%. I put only in air quotes. For gold, that's not much. And compared to the other metals this week, it's not much. Also, volume-wise, we're used to 225, 250,000 contracts on the tape in gold. Only $1.67 on the tape right now. So again, clearly a lot of that attention, a lot of that action spilling over into some of the other metals this week for obvious reasons. The big dog out here this week, listen, we're actually kind of interestingly split. About 14% of the paper is going away in about a day here in gold. So getting some of that near-dated flow again. Then we go all the way out to the July contract again, which about 20 days to go. And that's where about a quarter of the paper went up. So we're going to hang out there. We're pretty split. We go all the way out to August, about 23% of the paper going up out there. So gold kind of all over the place, 12% in the D's contract. And again, we're used to a little bit of longer term paper in the metals. So kind of weirdly symmetrical paper split into a variety of expiration cycles this week, which is kind of fascinating. We're going to head out to July again. 33.73 is where that future's hanging out. The vol, by the way, I forgot to mention the vol in silver, but the vol in gold, 18.30. If you know anything about gold, that's actually decently spicy for gold, where it's been down in the 14s and below easily. So 18.30 up about 0.7 this week. Nothing to sneeze at out there in gold land. And in terms of skew, this gets back to the point Russell was making earlier. We are very used to gold and all the precious metals really being just dominating to the upside, having all the bid to the upside. Nobody wants to touch the puts. And that's not what we're seeing right now. Russell kind of alluded to a smile, and we're kind of seeing some of that where It's slightly bid in the way you might expect, but nowhere to the degree. Going out to the July contract, those calls are only 2.1% bid, up from 1.4% bid. So I would consider that almost flat at that point. And the puts are about 0.8% discounted, and they were literally flat a week ago. So I would consider both of those flat. So that pretty much falls into that smile category that Russell was talking about. Now, if we go a little bit farther out in time, that's usually where the traditional biases of the long-term metals holders, let's call them, to borrow the crypto term, tend to hang out. And that's where we're seeing a more traditional skew. If we go out to January, February, March of next year, we're seeing those calls roughly 8% bid, the puts about 4% discounted. So that's a little bit more lining up with what we expect. But yeah, right now, going out to July, not a heck of a lot of action to the upside. We're kind of hanging out flat, which maybe shows us the options market right now, at least in the near term, not pricing in a lot of bias or fear in either direction. And if you're wondering what the big dog is out there on a kind of quiet week on the gold front, we're actually going out to August. It's the AUG 3500. So again, makes some sense. That's an important psychological level, a level we just broke through and then blew right past in the wrong direction back down to 3200. So it makes some sense that 3500s would be dominating the tape this week. 6,200 of those going up this week. Looks like the big day was actually Monday, and looks like people were probably bailing, which makes some sense. I mean, that 3,500 strike was pretty short-lived in terms of on our radar. But then again, if you like that level, I think gold might have some more upside. Maybe you want to load up, kind of like the rest of the week until today. Then today, springing back to life with about 2,000 contracts going up today. By the way, these 3,500s in August, they're trading for $53.50 on an average price. So a little bit of juice on those, even though the skew is coming in. So it's up to you whether you think that's worth it or not. Obviously, a much richer underlying than we're talking about with silver, which accounts for that price discrepancy there, listeners. I don't know, AUG 3,500s, $53.50. Is that floating your boat, Mr. Rhoads? Anything else catching your eye in the world of the king of the shiny stuff, sir?
The D's 3,500 seem to that's about 4,500 of those have traded, and that's the close second. The funny thing is that's the active contract today, and it really looks like it's almost a balance between buying and selling. Really, not a whole lot of directional bias. The block trades I see, there's a handful that look like they're close to the bid and a handful that look like they're close to the offer. So this is probably a very significant price point for gold, just looking at the interest in the options, but also, it's not like there's a whole bunch of bullish interest in the slightly out of the money calls. It's mixed. And then beyond that, I just didn't pick up on a whole lot of bearish trades. So I just wonder if at most we're pausing with gold, not necessarily turning to the downside.
And since everyone seems all hot and bothered with platinum on the old social medias, let's hit it too. Why not? We'll jump in on the old hot trending action. Platinum right now, $11.39. If you're wondering why we don't talk about it too much on the show, it's not that big of an option story. It's up 8% this week, though. Obviously, a hot week. If you go back to the end of our show, last week's up 4.5%. Still a good run, up about 85 handles just since Monday. 1139.5 is where that front future is hanging out. If you're not tracking platinum on a daily basis, and why we don't talk about it every week, 8,300 contracts on the tape. And this is a spicy week for them, so not a huge option stalwart. That said, what is platinum vol? You might be wondering. It's at about a 29, almost a 30 in that AUG contract that has about 40 days to go. The front contract's about a 29 as well, with about 13 days to go. That's where half of the paper, such as it is, went up this week. The big print, though, actually, with almost closing in on 11.5, there's 761 of the July 11.5s going up this week. But actually, the big print is 1,000 of the par puts, listeners, which is kind of interesting. These are going up in October. So let's see if I could pull up some prices for you, because those are actually trading, I do believe. They traded all today. 1,002 of them going up today against an OI of 1,100. So they could be closing. They traded for an average price of $13 on these October par puts. So $13 par puts by October, listeners, in platinum. Are you feeling a little bit of a pullback? Would you be an overrider of those? Mr. Rhoads, are you a big watcher of the platinum? Seems like the kids on the Twitter love it.
That's a big move, man. And it's the biggest, the biggest contract for August, September, and October is the 1,000 strike puts. Everybody's gravitating to that round number there. And just looking at the activity on those, it does look like somebody was bailing out of some of those October ones today. So we'll see if the open interest goes down based on the volume that we've got there. I love it when the volume completely matches up to the open interest. You just know one person was all in there. Everybody knew they were all in there, and then we all know when they got out of that trade. So it'll be interesting to see what the open interest in the October 1,000 puts looks tomorrow after they've settled the books, etc.
Yeah, I like having a chance to talk a little bit of a platinum. Just mixing it up out there. And since we're mixing it up, let's get base as well. We're going all metals all the time. As Mr. Rhoads said, it's a bit of metals whack-a-mole coming in on the show today, listeners, as we're heading out to the start of a little bit of copper action out there, listeners. Copper going to that drop down, pop out of precious, and then go into base. That's where you'll find copper. And again, copper, when we launched this show, really, listeners, copper wasn't a huge option story. That has changed. 33, almost 34,000 contracts on the tape. As Russell alluded to, copper, very much a byword for our economy and indeed the Chinese economy very much these days, and the Chinese demand coming out of it there. So a lot going on when you're looking at copper. Hanging out right now, $4.92, up about 25 cents or 5.25%. So again, a hot week, a spicy week in the metals. When we're playing whack-a-mole, we knock one down, another one just pops right up, listeners. The wild times in the metals. Again, about 34,000 contracts. That's actually decent paper for copper. We've seen it get spicier than that, but pretty decent, all things considered. We're hanging out again in the July contract. Nearly half of the paper, 47% going up out there. 492 is where that future's hanging out. The vol, very similar to what we were just talking about a 29 here, listeners, up 3.8 points out here in the July copper. Mr. Rhoads, are you a big copper watcher? Anything catching your eye out there this week, sir?
It's been a big copper watcher just because I think it's a good leading indicator with respect to the global economy. And I feel like every time we get some sort of news out of, copper dipped when all the tariffs were announced. And got hit pretty hard with the tariffs, just because of the impression that we're going to have a disruption of the global economy for a bit. And we've recovered somewhat from that. We haven't returned to levels that we were at the beginning of the year, but we're in the process of recovering on that one. I do think there is a bit more upside here, but the skew extremely balanced. Looks like pre-1987 skew, just a perfect smile there. So the option market's not too concerned about more upside, but I do think as it's a market that you want to look to if you believe that we're going to get past all of this tariff stuff and the global economy is going to start functioning as a well-oiled machine once again, hopefully. So I think it's a market that will benefit greatly from all of that. But a lot of that is wait to be seen.
Pre-87 skew. I like that, sir. Throwing out a nugget. If you don't know what the heck that means, listen, go dig up some history of skew. Listen to some of our older episodes on this network. We've talked about the evolution of skew and how it was born in that 87 crash many times. Listeners, good little homework assignment for you out there as we dive on into what's lighting it up out here this week in copper. Like we said, nearly half of the paper going up in the July expiration cycle, so we'll hang out there. As Mr. Rhoads alluded to, the skew, such as it was, calls 5% bid last week, puts 3.2% discounted, so very much a traditional precious metal skew a week ago. All of that is vanished. All that is gone. It is almost exactly flat in both directions, which is kind of weird. Again, showing us that around this 5 handle, it seems like the options market, at least going out to July, doesn't really have much of a bias in either direction. In fact, if you go out to a little bit farther, go out about 21 days, you have the same thing. The skew was pretty much flat. So interesting stuff out here. The big dog this week, listeners, was the July 5s going up almost 2,000 times, about 1,800 times. I was just pulling up some prices for you. It went up from about 14 cents on average today, listeners. So July 5s, 14 cents. You like rolling those bones? Think we can break through the 5 handle? I don't know. It's not the craziest trade I've ever seen, Mr. Rhoads. If you think copper's got a little bit more upside, obviously the question is, can it break through that psychologically important barrier of 5? If it can, then 14 cents seems like a deal, sir. What do you think?
It reached around 540 back. I was looking at skew. Let me go back to my chart. The 530, 540 range was where we were in March before all the tariff announcements came out. So it's very possible that we could, we go back up to 540. That's a double on buying those calls.
Yeah, that's a good deal.
I don't see that outside of the realm of possibilities.
I don't hate that one, listener. You like those, listeners? 14 cents. You got to be willing to roll the bones. I guess you can call it a sensible scratch off. Maybe copper is your huckleberry, listeners. As we keep on rolling, if you're wondering why we don't talk about Palladium on the show today as well, even though it's number 3 up 5.65%. Yeah, it's moving, but it's only 700 contracts on the tape, so it's not a huge options story out there. So, Mr. Rhoads, are you exhausted on the metals? And if so, what other complex should we head to next?
Yeah, pretty exhausted on the metals. We can do energy or equity. Which one would you like to do?
Tell you what, let's go out into a little brief sojourn into the energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, go into that menu. You're going to pop out of the metals. You're going to go up to pretty much 3 slots from the top to energy. And then we're going to kick things off. The Widowmaker is one of the lone energy names breaking into the light side top 5 this week, up 6%. So I suppose we have to kick things off there. Is it a hot week out there? And it's pretty decent. 818,000, not north of a million, but also pretty much 2x what we used to expect in a normal week, around 400,000 contracts. So a nat gas, just a different beast these days. Also, Mr. Rhoads, how wild is that to say? Nat gas heading into the start of summer, 370, popping 7.33%, putting up nearly 1 million contracts. Isn't this supposed to be the time where nat gas is sleepy and boring, sir?
Supposed to be something we're not talking about right now. That's as you just said. It's surprising to have seen it, on the first week of June on the most active or the biggest mover list, but beyond that, not just being on the biggest mover list, but being on the green side of it, I think is a bit unusual as well. Usually I can come up with a little bit of a fundamental story. I'm not really, sure if there's a good fundamental story here, but it's also down. It was back in March, nat gas was as high as 5. So even though it had a good week, it doesn't necessarily mean that it's had a good time over the past 2 or 3 months. So that could even just be it for that market. That could be a dead cat bounce.
It is very strange.
I'm using every Wall Street term possible today.
You are. Sell in May, go away, dead cat bounce, all of it. But you're right. This time of year is usually the time when you set it and forget it. You sell nat gas. Yeah. You don't pay attention to it again until the fall. So the fact that we're even talking about it in early June, the literal start of the summer doldrums out there is kind of fascinating. Again, 800,000 contracts on the tape. July is where we're hanging out again, about 20 days to go. So that's the sweet spot this week. 20 days to go is where everybody's hanging out. I'm sure if we get to the equities, that will change. But for most of the products we're talking about right now, it's 20 days. The July contract is the sweet spot. What is, vol and nat gas today? 58.65. And that July contract off about a point. Also, if you know anything about nat gas, once you start getting into the 50s, that's kind of light from a vol perspective. Again, it is the summer months. It's supposed to be kind of quiet out there, but interesting stuff nonetheless. The skew not holding a lot of secrets for us. The put's mostly flat. They were flat last week too. The call is about 3% bid last week, about 3% bid this week. So not a lot of evolution on the skew front out there. And then going out to the calls, though, that's where the action is. If you said 370, I'd expect probably the 4 calls to be leading the dance. You would be wrong. Time to just end the show right now. You have no idea what you're talking about. I'm kidding, listener. This is the 4 halves. It's the 4 halves in July, listeners. Going up 72,000 times. That's your big dog. That's your huckleberry. this week. In fact, the 4 is only putting up about 29,000, so a mere fraction of the 4 halves, which is, again, kind of fascinating. Usually we see the paper lining up around these psychologically important levels. For whatever reason, the 4 halves are your huckleberry. The big day was Tuesday, 37, almost 38,000, all of that opening. So wild paper, 11,000 today, 19,000 on Monday. Looks like closing there. So back and forth action. I'm looking for some rolls. If they were rolling from the 4s, it was almost 1x4, which would be a wild roll to do. So you could be sitting on some money. We've rallied. So you could be doing a house money roll like that, but 1x4 to the 4 halves? You're looking for a return to that level Russell was just talking about, the 5 level and beyond, if that's the case. 11,000 of the 4 halves today against only 7,200 of the 4s. So it doesn't seem like rolling paper, listen. It seems like just straight up upside palooza. Mr. Rhoads, are you down for a little bit of 4 halves in July in nat gas, or is that just a bridge or perhaps a couple of bridges too far?
I think that might be a bridge too far. That's a long ways to go. And there's a whole lot of, I think there are 2 or 3 resistance levels between here and 4.5. And that makes me like some of the other big, some of the other big volume options even less. You mentioned the 4.5s. We had 24,000 of the 5 calls in August. I hope they were selling those. And then you go all the way out to October. They had a little over 11,000 of the 6 strike calls. Now, I could get on board with a speculative out of the money trade going into the fall. I would be more comfortable buying the 6 strike calls that use in November or December than the 5 strike calls use in August. Does that?
No, that makes
make
sense. It starts lining up with that, start the beginning of the fall
seasonality and stuff. Yeah.
I'm looking here.
In fact.
So price-wise, if you're wondering, listeners, the 4 halves in July, the only thing they have going for them is they're cheap, which makes sense. They're a low delta call. Only 3 cents, Mr. Rhoads. If you go down to the July 4s, a little bit closer, a more psychologically important level, those are about 11 cents out there. If you go out to I'm looking at where they're trading right now. I think you say the October 6s. Is that what you said? Those are trading for 16 and a half
the October 6s.
16 and a half cents. So for a little bit more expensive than the July 4s, you could get the October 6s. Obviously, a lot more duration, higher strike level, obviously, too. I can't remember the last time we tickled 6. It's been a little while. But that said, if you want a little bit more duration for roughly the same outlay, then maybe the October 6s are your huckleberry, Mr. Rhoads. Mr. Rhoads, you want to go to WTI? You want to dive on into equities? I'll let you choose where we go next.
TI, and I think the last time we had 6 on natural gas might have been 2013.
Yeah, it's been a little bit of a run. I'm trying to think. Well, we got above that obviously in the madness of the Ukraine invasion. That's when we started talking about 10-handle calls going up in nat gas. But outside of that of aberration, you're probably right. You got to go all the way back to the wild times. And I feel bad for anyone whose introduction to nat gas was that period, because they thought a 10-handle or a 9-handle call was a reasonable trade because that was their frame of reference. They hadn't lived through the before times where it took a Herculean effort to get nat gas to break $3. So yeah, wild times out here, listeners. Let's pop out of nat gas now. Let's go to the product family. Let's go to crude oil. So you're going to pop out 1 slot, or 2 slots, I should say, from nat gas to our old pal WTI. It's been a rough year for WTI. We've been breaking down the trends on our futures rundown program if you are intrigued. Back north of the 60 handle, listeners, 63.32, up $2.50 or a little over 4, about 4.2%. So popping back up a little bit this week after all the momentum. Trade war, drill baby drill, really cut the legs out of any sort of support that was in the crude oil space for most of this year. Getting a little bit back this week. Also reflecting in the volume. The volume's been kind of light of late, coming back a little bit this week. 530 on the tape. Not much compared to nat gas, but obviously we expect 400, 450 in WTI. So a little bit more paper out there. And looks like the big dog out here this week, once again, going out to July, this time only 11 days to go. 41% of the paper going up out there. And the vol in this 29 level, 28, 29 level, kind of looks like the magic level this week. A lot of the products we're talking about hanging out of that level, including July WTI, 28.66, off nearly 8 points this week. So They're crushing the WTI vol. What's catching your eye out there this week, sir?
This is the first market that we've looked at that the skew is to the downside. It does look like, and you can say, I look, you use the CME thing, and I also, I use my Bloomberg as well, and they're both saying the same thing. Of course, they're saying the same thing. But as you go up to about the 65 and the 70 calls, you've just basically got flat term structure in that direction, and it's starting to curve up below 60. So it looks like there's some folks either concerned about or speculating that we're going to see sub 60 oil. I like being on this program because it makes me look at markets that I don't look at as often as I should. But I do think, in the next few weeks, we're probably going to see a final bottom for oil and get an opportunity to bid it up, either based on us getting along better with the rest of the world, or a multitude of other factors that can always get energy driven to the upside. But it doesn't look like there's any rush to buy in at this point.
All right, listeners, let's look and see what's lighting it up out here in WTI. I said the 60 puts were the big dog this week in July. So again, going back to that 60 level Russell was just talking about, doesn't seem like that long ago we were talking about, if you break 65, look out below. Then we broke 60, back north again, but maybe we'll be heading back that way in the near future. It looks like, again, the 60 puts are where the action is this week. 25, almost 26,000. The big day was actually Monday. Looks like about almost 10,000. Looks like paper might have been bailing then, so they could be closing. 6,000 on Wednesday, also kind of closing. 7,000 on Tuesday opening, so we got some back and forth action. Net OI coming into today about 20,000, and I was just pulling up some prices on these July 60 puts for you listeners if you're intrigued what they're going up for. And looks like they're trading for about 28 cents out there today. If you want to go a little bit farther out, if you like the 60 strike a little bit longer term, Mr. Rhoads, maybe out to September, those are trading about 10x, about 268 or so. So which do you like better, the the July, or all the way out to September? But if you're looking for a rebound, I'm guessing you don't like September, Mr. Rhoads.
I don't particularly like September on that one. I think by the time the summer's over with, we'll probably say that we found a bottom in oil and start to work our way higher. It is interesting, though. Some people don't think I've got a clue about what I'm talking about, because the biggest volume in the September contracts looks like it's the 50 puts, and same thing for October. So somebody's going, and then same thing for December. So somebody, and when we look at the longer dated futures like that, I do believe that, and I don't, this is just market experience. This is not quantity, I haven't seen numbers on it or anything else. But my assumption is a lot of the trades that are going on that far out are from legitimate users of the market that are trying to hedge something, or have a risk that they're trying to offset, as opposed to speculating on where the price of oil is going to be in September or December. So when you gotta give a little bit more credence to option trades that are farther out of the money, because you've got to assume that might be. I get in trouble when I refer to hedgers as the legitimate users of the futures markets, but they are. We need them. They need us as speculators to offer liquidity up. But when we go farther out, I just automatically assume that those trades are being done by hedgers that may have a little bit more insight into that market than we do.
All right, listeners, we're coming up against it, but we are joined by the once and future Dr. Vic. So let's finish up with a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, pop out of that energy. Go in that drop down, go down. One slot to equity indexes to kick it off in S&P 500 E-mini. And Mr. Rhoads, our chat pointing out as we're talking, this sell-off exacerbating in the market. Sounds like the Trump-Musk feud getting hot, getting spicy here. Trump calling Musk crazy. Tesla selling off 18% today, 56 handles. The S&P was flat, selling off 0.75% now, threatening to break 5,900 again. NASDAQ off 1%. Wild stuff, Mr. Rhoads. You seeing this?
I am not. Now you have me checking my personal account and ignoring you completely.
Oh, you are heavily short. That's right. You gotta be celebrating now.
I feel okay about it. So
our chat saying it's getting nuts. Trump threatening to cut Elon's tax credits. Elon saying Trump is in the Epstein files. Wow. That escalated quickly to pull out the vernacular of what's that movie though? Not Anchorman. There we go. That escalated.
Do you remember when Musk wanted to help rescue some miners over in Southeast Asia, and the guy refused his help? He called the guy. I'm not. You know what? Google it. I'm not even going to say what.
Don't say it on the air.
But it was pretty bad. It was pretty bad. And we know that I got ripped on once by somebody who English wasn't their first language, and they said some similar things.
What a surprise. Two big egos in the room can't get along for very long. What a shocker. No one could have foreseen that happening. Yeah. Maybe not this quickly, but it definitely was a foreseeable outcome. So yeah, the market's not liking it again today. VIX ticking back up. It was down to 17.25, back up to 17.75. All of the SVIX in the chat, all of our SVIX longs are now mad, Mr. Rhoads. What's catching your eye in the equity and vol world today, sir?
Before all of that, we seem to be returning, and I know this is for tomorrow's program, but we had some of the nicest looking contango over the past couple of days in VIX that we've seen probably since the tariff announcement. So it did feel like the market had an expectation that we're getting back to some sort of normalcy. And even with the goofiness that's going on between these two guys, what does it really do to affect? I can understand it possibly having a negative impact on Tesla stock. And I know that I will not put it past Trump to put something specific in there that hurts someone that's made him mad. A lot of people don't realize this, but there's a tax benefit to being an owner of a professional sports team, and he's trying to eliminate that. You know why he's trying to eliminate that? Because he tried to buy 2 NFL teams and they shot him down twice, so he's getting them back. It's the revenge tour. So I'm not, but I don't know if that should be having a big negative impact on the overall market. I would be more concerned if Trump were tweeting a bunch of negative stuff about, Xi over in China and saying he looks like Winnie the Pooh and things like that. That would have me a bit more concerned about the equity markets. I was looking at, I had all kinds of great notes before all that fell apart about tomorrow being the non-farm payroll number and the straddle for both NASDAQ and S&P looking kind of cheap. The average move for the S&P is about 0.9%. The at-the-money straddle was a little under 1%, which I think is fairly cheap going into one of those into that sort of an announcement. And our economic numbers might be a bit wonky if you trade around these things, and I know the S&P is a great thing to trade around economic numbers, but I've heard from some data scientists that they've let so many people go at some of the entities that record these things that they don't have a whole lot of confidence in some of the numbers they're putting out. So it will be interesting to see what we get tomorrow. I think I'm going to start paying more attention to, and I know I've deviated tremendously from equities, but what I'm talking about has a big impact on equities. I'm going to pay more attention to the revisions than the headline number tomorrow for the initial reaction. But right now, the market really not expecting that much out of what's supposed to be the biggest economic number of each month.
If you want more of that analysis, listeners, tune in to Volatility Views tomorrow. We go deep into equity vol. But it's been a fun show, Mr. Rhoads. You went deep into metals, playing some whack-a-mole. Once one pops up, we nail it, and then the next one pops right up next to it. They kept popping. A rough week for metals whack-a-mole. My arm is tired. Is yours, sir?
Very, always.
All right.
I'm old. I walk around in pain, and I just complain about it.
There you go. That sounds exciting. Get all the young kids listening just excited to tune in more. Listen. All right, listeners. If they want to tune into your stuff in the meantime, Mr. Rhoads, where should they go? What should they do?
Pretty much anything I do is on Twitter. My full name, at Russell Rhoads. I've got 3 systematic approaches to trading that I'm going to be publishing in the next couple of weeks that are finally getting done by the people that make these things look pretty. One of them's trading block options, one of them's trading systematically trading VIX, and one of them is systematically trading V stocks. Something for everyone.
Something for everyone. And speaking of something for everyone, you head on over to cmegroup.com. There is literally something for everyone. Of course, you're going to start with our TWIFO report, cmegroup.com/TWIFO. Then we've had a lot of their great economists and researchers on the show over the years. A lot of great research popping off over there. A lot of great education. They can get into the product stuff. You'll go down a few rabbit holes, but trust me, they're fun. But kick it off, cmegroup.com/TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again, if you didn't get enough of Mr. Rhoads, he'll be joining me tomorrow. Who else will join us? You got to tune in to find out for the weekly wrap-up, the partay that is Volatility Views. Always a good time. Then we're back one final time, exclusively for you pro cats who are just having a ball in the chat right now with all sorts of wild stuff. TheOptionsInsider.com/pro is the place to go to learn more. Congrats again to Madam Gigi, our May Pro Trading Crate winner. Then we're back again on Monday with the option block all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.